Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets, as always brought to you by FTX. Links available in the description below. At the very least, go read our leverage trading guide, which is free and very informative. If you want to sign up to support the show, please do so, and all of that is in the description. As ever, thank you for your support on the channel, the likes, subscriptions, comments, sharing, engaging. All of that is very helpful to us. So let's get straight into it. The monthly time frame is coming up, specifically the monthly close. We have 6 hours left. I'm not a huge fan of this monthly time frame at the moment. I think the closes have been rather indecisive. Last month closed below, didn't really lead to a breakdown. This month could well close above, and maybe it doesn't lead to a breakout. It just seems like price is stuck in the low 20s, and the monthly candles aren't forming much and aren't giving decisive signals. So for example, you can imagine a world where this month spiked previous month's low, and then closed above previous month's high in a very kind of impressive engulfing fashion. That would definitely be a good monthly signal and the type of strength which you'd expect at 20k. For the time being, we don't have that. You know, this monthly closed a bit below, this one's going to close a bit above. I don't want to read too much into it, especially when I think the weekly and the daily timeframes have a lot more signal. So bit of a wash on the monthly time frame. And I don't want to read too much into it because I don't think it's useful, to be frank. So the weekly and the daily timeframes are really good. One thing to note on the weekly time frame, first and foremost, is market structure is still unchanged. We will talk about the daily shift in market structure, but on the weekly, it's not there yet, right? You have a low, you have a high, you have a low here, lower high, lower low formed on this swing, and so the market right now is yet to form a higher high, and so market structure is still neutral at best, but it does look like bearish market structure if you look at recency, because you had a lower high and then a lower low. So no shift in market structure yet. The earliest that could form, I think, is if it were to trade and close through this weekly swing point at around 21k or thereabouts. Anything through there would technically on the weekly closing basis be a bullish shift in market structure, and that's when you can start cooking up continuation setups or higher low pullbacks and kind of shift directional bias on this high time frame. That's not currently available, and it's something worth watching out for. The second thing I want to bring up on the weekly time frame is this kind of cluster which we've discussed on and off around the 21k handle based on this consolidation here. That's sort of where the market's slowing down at the moment. You had this cluster, failed breakout, and now acting as resistance once again. I know we've been on and off about this level, but if we go back on the daily time frame, it should be quite familiar where it comes from. If you'll recall, for a while we were talking about this highest close, lowest close type of consolidation, and you can see that the midpoint aligns perfectly with that weekly cluster at around 20.7, 20.8, or just under 21k. So no matter how you slice it, there's quite a lot going on at that 21k handle, and I'm not a huge fan of the fact that it's currently acting as resistance. If you're looking for more upside or a move from the range midpoint to the range high, that needs to get flipped, and at the moment it's not exhibiting that type of behavior. Again, the constructive thing on the weekly time frame is that the discussions we were having in previous episodes about the underside of this range at around 20k, that's been broken, right? So we had a strong weekly close above it, that's good, so tick there. But now it's already getting stuck in an area where I hoped it wouldn't get stuck because it's the midpoint of the range. I like to trade price at the extremes of the range, and usually if you're getting a strong move from the range low to the range high, the midpoint shouldn't be providing that much resistance, right? Hence, don't diddle in the middle. But for the time being, that is the obstacle to price. So if we go back to our daily time frame, we know and we've established, hopefully, that there's a lot of significance at this 21k level, no matter how you want to slice it. Again, this daily range, that's our midpoint. If you take a basic kind of cluster or support resistance point of view, you can see that it's quite a sensitive point for price. This is where the market structure breakout came from. Support, support, overshot, and now resistance again. So that's sort of the biggest obstacle in our way. If you're the type of trader that's good, and I'm not, at trading continuation setups, any strength through 21k, any acceptance there, pullback, whatever, that should set up a move towards, I think, just this swing high candle in general, if not the range high and maybe the high itself at sort of 22, 23k. But for the time being, the midpoint is acting as resistance, and that's sort of the reason for the slowdown that we've seen. Now, I did mention market structure, and it's not broken on the weekly time frame, but there is evidence that it's broken on the daily time frame, which is kind of our lowest time frame of reference in terms of high time frame market structure shifts. And sort of basic eye test, this important swing high here, the market did close above it. That's a bullish break in market structure. And now that immediately that market structure level is being retested, right? Whether you want to use this candle body or this one doesn't really matter. The level ends up being the same at around 20.2, 20.3, or thereabouts. Now, a couple of things. I'm not immediately a fan of the market just coming back, getting stuck at the larger time frame range midpoint, spiking the high, and then all the way back to retest the breakout. The best breakouts are the ones that just break and go. In this case, it's slowed down an area where I wasn't expecting it to slow down, and it's sort of retesting the levels straight away. So sort of there's no real time, space, or distance built between the breakout and the retest. I'm not generally a fan of those types of structures. However, purely structurally speaking, the way you could label this chart is have that market structure level, and it's fucked below here. Right? So we know that if this closes, if we get daily closes or higher time frame acceptance below 20.3k, what does this become? Well, it becomes the failed breakout or deviation, right? If the market, let's say, closes through here and that's it, is accepted back below the range boundary, this ends up being your excess or your deviation, whatever you want to call it, and then you target the other side of the range, which in this case would be the range low at sort of 18, 19k or thereabouts. There is an extra proviso that comes with this idea. My personal view is that given how much time we've spent sort of at this range low, and you'll recall this is where you have to really zoom out to see where this level comes from. We've spent all the time in the world bouncing off of 19k or thereabouts. I'm not sure that level would survive another test off the back of a sort of high time frame failed breakdown and straight down into that level again. Maybe it offers a small bounce, but bigger picture, I'm not sure I have much faith in this support as is, and even less faith if the test comes off the back of a failed breakout, which is like an extra bearish contextual type of thing. Now, those of you who've been watching Technical Roundup for a while know that, well, I certainly like to do this, Don as well. We like to trade close to our invalidation. That's because we'll know we'll be wrong quickly, we know exactly where we're wrong, and the risk reward of doing business at those types of areas is the highest. So while I'm not contextually a fan of this mid-range slowdown, the immediate retest, purely structurally speaking, this is kind of a do or die area, and I'm generally open-minded towards at least smaller or low time frame positions in those types of areas. So if I'm going to get any type of bounce or long trade or give the market one last chance to prove that it's strong, it's going to be based around as close as I can to my invalidation, right? So in this case, if we look at where this daily level aligns, there's a nice 4-hour cluster formed at around 20.3 to 20k. And so I could technically, in my system, take a long in this type of area, not with blind limit orders, as much as I'd love to leave that type of guidance. I tend to avoid limit orders unless the market is really, really breaking and snapping in half and I'm trying to get some stink bids at extremes. For the most part, especially for these intraday type of setups, I do have to observe the price action. But as far as trading goes, I am allowed to look for signs of strength at the extremity or slightly below it, which in this case would be 20k or slightly below it. So ideally, something like, the market pushes down, maybe even spikes this low, and then shows signs of absorption, strength, reclaim, whatever, then I could arguably long it close to my invalidation and target at least a move back to the range high, if not those higher time frame midpoint targets. So it's one of those cases where the market looks so shitty and it's so close to invalidation, I almost have to be open-minded to longs because it's so close to where I'm wrong. And again, this isn't one of those set and forget type of setups. I definitely have to be looking at the price action, ideally as close to the extreme as possible. But even if we forget all of these higher time frame levels for a second, if we just simply treat it as a range where our support is at 20k and our resistance is at 20.8k, you would treat it like basically any other type of support resistance structure, right? You can see the market made an effort to break the range high and failed. If it's going to be bullish, you expect it to an effort to break the range low, which fails, and then you can target the range midpoint, the range high, and maybe if you've got higher time frame conviction, a swing as well. Now, what would make this market? So that's the first thing, right? If I'm going to do business, ideally it's going to be around this range bottom extreme, as close to my invalidation as I can. And it's not a set and forget thing. I want to see evidence the market is soaking this up and some signs of imbalance, absorption, whatever. Or failed breakdown, all the price action stuff we've talked about at length. In terms of invalidation or things that would look really bad during the course of this week, I think any strong lower low daily closes, or at this point daily closes through this 20.3 area, that to me would signify a failed breakdown and a failed breakout. So when a bullish pattern fails, that's bearish. A breakout should be bullish. If it fails, that's bearish, kind of standard stuff. And that would kind of, the earliest signal of that would be a daily close back below 20.3, and I'm completely disinterested in the market at that point. I might try to short if the technical setup is there, but realistically speaking, I'll probably just let it float for as low as it needs to go and then kind of see at that point what happens. So that's BTC. Hopefully it's clear. If you're looking for like sort of levels to plot on a different chart, something to keep track of, I would just simply use the daily range we talked about. Range high 22.5, range low 18.9, range midpoint 20.7, and that should be a pretty good intra-week guide. As far as ETH goes, a lot of the similar arguments apply. I think the monthly close is slightly better than on BTC, but again, I would have preferred some sort of breakout monthly close above the 1700 highest close. That's not available at the moment, and in general, I think Bitcoin's monthly chart, although not great, has been better than ETH. On the weekly time frame, it does look better than BTC, but the same consideration regarding market structure is applicable here, which is to say that we had a high, we had a low, we had a lower high, we had a lower low, and so as this rally is taking place, that market structure, that bearish market structure, hasn't been invalidated, and the first sign of invalidation would be a close through the 1700 handle. So that's not there yet. If it wants to play ball, that's kind of on higher time frames at least, that would be the first signal or trigger for that. In terms of where's support for ETH, I really think you can sort of add similar levels to it, which is to say, if we take this 1400 cyclical level, which is the prior all-time high, and then you've got resistance, support, breakout, I think anything below that starts to look really suspect. You could also just cluster out this pre-breakdown consolidation close to 1500. I think that's a decent little line in the sand. Anything below there this just starts to look kind of unacceptable. I'm less of a fan of these types of resistance structures at 1700. It's a bit, I just don't like this area, so it's less clear to me. Really, the only trade that comes to mind as I'm speaking out loud into my microphone would be, for example, if the market were to dip deeply into this type of region, maybe I get some sort of short-term bounce into a prior level of support here. And that's boring, but a lot of the time, those are the kind of the trades you have to go for. One level at a time, buy support, sell resistance, and see what else happens. If you're looking for aggressive continuation, Bitcoin is really more the chart that's at a do or die level. I think if ETH is going to play ball, given it extended a bit further from those levels, you don't have the luxury of trading the prior cycle's structure. If you're going to look for something intra-week, I would just box out this little consolidation on the daily that took place before the most recent leg up. And if the market's going to be strong, that's where it really should be catching a bid. The deeper pullback level and the do or die one, the one that's close to invalidation, is 1400, but you can't really compare one-to-one BTC and ETH because BTC is already here because it was weaker, while ETH is testing like a more recent and nearer by support type of structure. And there isn't like a ton I want to talk about intraday. Honestly, my focus is on that BTC retest because that's going to determine my directional bias for crypto more broadly. This is some just some intraday color. I still think 1400 is the big level to hold. Now, as far as equities and indices go, if you're looking for bullish arguments, they would have to come off the back of the upcoming positive close in equities. As you'll recall, we spoke at length about how a lot of these breakdowns in the S&P 500 have been turning from broken support to resistance. It looks like this monthly close is going to be different, and you have a close below, close above type of structure, which you know that I like, and it would suggest a shift in behavior and that maybe we've carved out a new range. That argument is most clear on the weekly time frame, where you have, or had, I suppose, a level of support, a lower low breakdown, attempted bearish retest, and then an extension through it. So this ends up being your deviation, and the original range low is support once again. So purely technically speaking, even if this monthly starts to pull back, any pullbacks into this 3700 level are pullbacks into support, purely technically speaking, and that's also where your invalidation is. If you know if it closes below this lower boundary, the idea is cooked, and we like to do business as close to invalidation as possible. So any type of, you know, inverted head and shoulders types of pullbacks, or over under, whatever you want to call it, I think those dips into support are good technical setups, and ones I'd definitely be open-minded to punting. If not on equities themselves, which I don't trade, I'd be looking to play crypto bounces if I think the correlations are in my favor. In terms of resistance for the S&P, given it's just been a very strong move through this level, I think there's several ways to view it. One that I like is if we take this most recent range with 3700 as our range low and the top of the rally at 4300 as our range high, you get a lot of confluence around the 4000 handle. You get the nice round number, you get this consolidation, this kind of sandwich between nukes, and you can see it kind of almost pierces through the midpoint of that as well. So 3980, 4000 as an interim level of resistance for the S&P makes a lot of sense to me. So you've got your higher time frame range low at 37s, higher time frame range high at 42, 43s, and a nice midpoint around the 4K handle, 3940. So that's kind of relevant S&P 500 color. You could start adding levels just here, pretty much where the market is right now at around 3900s or thereabouts. I think that's reasonable as well. But I think the big boys, the areas which I want to trade the most, would certainly be any pullbacks into 37 or a deeper push closer towards 40,000 round number. And unsurprisingly, the given tech has been beaten up a little bit. The Nasdaq looks weaker, but it's still using the same levels we've had for a while, with our range low at 11.1 and range midpoint at 11.6, and that seems to be where the market is at the moment. In terms of calendar stuff, we'll talk about this more in the newsletter, trletter.com, free weekly newsletter. We have FOMC coming up, and the press conference that comes afterwards. That's probably a decent volatility catalyst as far as these things go. So that's what's on my radar. To be completely honest with you, the only thing I really care about is how this Bitcoin daily immediate retest resolves. Sort of 95% of my attention is on that at the moment. As mentioned, if someone wants to give me a good price at or through the extreme, I'll take it. I'll probably day trade it more so than hold it for some sort of swing, but I am looking for setups close to my invalidation if they're offered. Again, not on a limit order basis, but some sort of failed breakdown or something constructive, and then I can see if my line in the sand is going to be resistance, and maybe sort of add if it does something like that. Hopefully that's clear, a bit more precise in terms of lower time frames and trade ideas. Let me know if you prefer the lower time frame stuff when getting into the weeds. I know some people do, some people don't, given it's a weekly show. I would love to hear from you in the comments. As always, thank you to FTX for supporting the show. We would appreciate it if you'd suggest to them that we're not totally useless by liking the video, subscribing, or even signing up to some of the stuff in the description. I certainly do read the leverage trading guide, if not anything else. It's free, it's accessible, and it's made for you. That's all from me. Hope you have an excellent week. Happy Halloween, and see you later on in the week. Goodbye.